So we're going to try to retest that 100-day moving average one more time here. Now, if we get above that, that's going to set the market potentially up to a rally of the 50-day, where the 20-day moving average is now starting to coincide with that. So there's going to be a good bit of overhead resistance if we can get back to the 50-day. That's possible, but the least possible probably right now. The 100-day moving average is probably going to be the big resistance challenge for the markets over the next few days. Okay, let's talk a little bit about what you need to know before the bell this morning. Is the crisis over? That's the big question we all want to know. Yesterday, market rallied nicely. We kind of bounced off that low from Monday during that kind of that 3% down day. Of course, had a big drop there. Rallied a bit yesterday, rallied right into the 100-day moving average. And so this was that first test of resistance that we had at the 100-day moving average. And as we said yesterday, there's a lot of trap longs in the markets, right? People that got swept up into this, this sell-off looking for an exit. So we rallied to the 100-day yesterday. Sellers showed up almost immediately, started selling the market. Market sold off here a bit yesterday into the close. Still finished positive for the day, but well off the high of the day for certain. This morning, futures are pointing up again. We're going to try to open up again this morning. So we're going to try to retest that 100-day moving average one more time here. Now, if we get above that, that's going to set the market potentially up to a rally of the 50-day, where the 20-day moving average is now starting to coincide with that. So there's going to be a good bit of overhead resistance if we can get back to the 50-day. That's possible, but the least possible probably right now. The 100-day moving average is probably going to be the big resistance challenge for the markets over the next few days. Now, importantly, we've got this potential of this rally here. And again, I would suspect that, and again, if you go back and look at previous corrections of the market, and I'm talking about these kind of out of the blue corrections, like the fat finger crisis back in 2010, the 1987 crash, etc. All of those crashes like that, they rallied, they retested lows or set slightly higher lows before that correction process was over. And we saw this in 2015, we saw it in 2018. So a retest of somewhere in this kind of lower area of the markets, and again, even the 200-day moving average, because the 200-day moving average is going to continue to catch up here with the markets over the next week or two. So somewhere between that recent bottom that we set yesterday and that 200-day moving average is likely going to be where this market tries to find an ultimate bottom. Again, we've got to get some of these trap longs out of the markets. So as we kind of rally, we stop getting met with sellers every time this happens. So the point here is be a little careful. It's okay to try to nibble at some stocks that got really, really beaten up. If you don't own them, it's okay. And you want to take a small position in them as a tester, that's fine. Just realize that you may wind up losing some money in those positions in the near term before you find an actual bottom in them. So if you're going to make a bet here on a company, do the work, do the research, right? Do the fundamentals, but be willing to lose a little bit of money on that position, waiting for that ultimate bottom to be set. Because again, whether it's NVIDIA or Apple or Microsoft or any other company, likely we're going to see some selling come back down, retest that low before we actually see the ultimate bottom. That's what you need to know before the bell this morning.